Brett, thanks for coming on.
Thank you.
How are you?
Good.
So, Morgan Stanley came out with some comments talking about what the impact of a possible rating downgrade may be on them. Why don't you catch us up on that?
So basically or actually this month, Moody's came out and put 17 major banks on review for downgrade, their debt ratings. And all the banks are coming out with these disclosures in their annual reports and filings, just saying what the effects are of a potential downgrade. Now the point is, it's on review. There's still a back and forth right now. This could or could not happen. But Morgan Stanley came out and said, in the event of a one-notch downgrade, they'd have to post $919 million, billion in collateral, and also $4 billion if it was a two-notch downgrade, or $4.7 billion with event of a three-notch downgrade. That would take their debt rating from A2 to Baa2.
So, is there a sense, what do these numbers exactly mean compared to their peers? Are any other banks disclosing these figures yet?
Citigroup had some numbers last week, and theirs went up a little bit too. We'll see Goldman Sachs, sometime this week, and JP Morgan as well. But it's not an issue that's just related to Morgan Stanley. It relates to all these banks. And Moody's sees some structural vulnerabilities in investment banking. It is a risky business right now with the problems in Europe. Profits from trading and underwriting and investment banking aren't where they once were. And it's just a business that's under pressure a lot recently with some of the turmoil in the markets.
So is Morgan Stanley perceived to be more vulnerable or less vulnerable than their peers?
Well, they have a $180 billion liquidity pool, so it's not like they're in terribly bad shape. I mean, I haven't seen Goldman Sachs numbers yet for this quarter, but last quarter their additional collateral was double that of Goldman. So I mean, Goldman's perceived possibly as a bigger firm. Maybe Morgan Stanley's a little bit riskier than Goldman, but it's not like they're in any kind of dire shape. I mean, they have reserves. The firm is more stable than it was a couple of years ago. They've taken a lot of steps to really shore up the business. So it's a disclosure that we're seeing from all the banks, not just one.
And also, what you point out in your story is trading losses for Morgan reported 64 days of net trading losses in 2011. That's more than was expected, or how does that compare to?
Well, last year was 38, and we've seen trading become really volatile this year. I mean, so far year to date, volumes have really come in a lot, but last year you had these incredibly volatile days in August, especially with the European debt crisis, and firms can't make the same money they did from trading. So you take a risk, sometimes they just don't pay off. So trading is not the business it once was, and Morgan Stanley has actually bested a lot of its peers in the trading business on the equity side, but trading in general is just a business right now. It's kind of under pressure.
I'm sorry, I lost my train of thought there for a second. What can the companies do to avoid the downgrade? Is it accepted that there is going to be a downgrade? What can happen that either can make it more or less likely?
There's a back and forth with the ratings agency. Goldman Sachs CFO Dave Vanier was saying that he disagreed with what they said. There's kind of a back and forth between the firms. And the markets, things could change between now and then. We've seen this evolving, European debt crisis. One day where the market's up on it, one day it's down on it. So market conditions could change, the way the firms rate these companies, and it's not like it's a definitive issue. And Morgan Stanley, if they are cut those notches, it would put them in line with other firms. So it's really kind of a flexible, moving target, so to speak.
Gonna put you on the spot. Was Morgan Stanley going to be the first of the banks to be downgraded, do you think? Or is someone else, or are they all going to get downgraded at once? What do you think?
It's really hard to say. I mean, they had them grouped in the category with Credit Suisse and UBS, so honestly, I really couldn't tell you what the rating agency are thinking. I think we're all kind of...
the politically correct answer.
We're all kind of shocked whenever they come out with anything, so your guess is as good as mine.
And in the NL East, are the Braves going to challenge the Phillies this year or not?
If the pitching is healthy, yes. Prospects aren't good with Tommy Hansen's injury so far, but we'll see.
All right. Well, we'll see how that plays out.